Bismillahirrahmanirrahim. My name is Hassan and welcome back everyone. What a week we've been having, and my portfolio has been killing it. As you guys know, Nvidia is one of my top holdings, and if we look closely on the right, go all the way to the bottom, I barely have one share left. The question is, when did I sell it? Unfortunately, I sold it out right before the earnings came out. I sold exactly right here, around $300. I felt like Nvidia was super overvalued and it needed a correction, so I didn't want to take any chances on the earnings. And that's why this is where I sold it out for $300. Yes, I did lose out on 25 to 30% in gains, but I did make about 190%. Yes, I did lose out on about 30% in gains, but I made about 190%. So it is a solid, well investment made. You can never go wrong by taking profit. Even though I missed out on a lot, but I feel humbled and blessed to be making that 190%. If I didn't have sold it, I'll be making around 270% in capital appreciation. My average cost was around 106. So let's take you guys to my portfolio. Currently my portfolio is around $44,000. I do want to point out that there are so many financial YouTubers out there that do not show their portfolio at all, or at least in totality. However, that is not the case here. I show you guys when I'm up and I show you guys when I'm down. So if you guys look at it for one day, I'm up around $5. Look at it for 1 week, I'm up around $600. And then for 1 month, I'm up around 5.2% or about $2,100. Take a look at for 3 months, I'm up around $4,100. And then for year to date, I'm up around almost 24% or 8,500. We take a look at the 1 year chart, I'm up around $2,500 profit, and this is without counting the dividend. If I were to count the dividend, it would actually be a lot higher. And then we go click on my all-time chart. I've invested in the stock market in this portfolio since 2017, and currently I'm up around almost 23% or $8,200 in capital appreciation, or in $8,200 in gains. And if we were to include the dividends, is actually a lot higher than this. My point is I'm very clear, very transparent with you guys. So if you guys made it this far, hit the like button, hit the subscribe button, because I make these videos on a monthly basis, and by subscribing to the channel, you guys can track how my portfolio is doing, how my investing is doing, because I show you guys from beginning to end and I'm very transparent. Subscribe to the channel, follow me on a monthly basis, and also hit the like button to help with the YouTube algorithm. At the end of the day, we are all on the same team. So now I'm going to take you guys to my dividend tracking sheet on my Robinhood portfolio. And we can see in January, I made about $20. February, I made $31. March, I made around $97. And then April, I made about $22. So, but the trend is still up. My portfolio is still growing and their dividend is increasing. So if you guys look closely, you guys can see the trend line right here, right? But however, somewhere along this line, you can see that my portfolio has relatively, or in terms of the dividend, has flattened out a little bit. They are increasing, but they're not as increasing as dramatically as they used to. It's because I've been making a lot of changes to my portfolio. I've been shifting some of my companies and going into more solid, hardcore investing companies or high quality companies. For example, I've been adding a company called Crackle, ticker symbol GGG. It's a solid company. I currently own about 32 shares and my portfolio diversity is almost 6%. So 6% of my portfolio is in this company, Crackle, which is a value of $2,500. So if we scroll down a little bit and click on show me more. So Crackle is a company which engages in designing, manufacturing, and sales of systems and equipment used to move, measure, control, and dispense the spray fluid and powder materials. If we scroll down a little bit more, and we can see what the bulls say. The company generates here a strong free cash flow, averaging around 17% of their revenue in the last decade. Crackle has a healthy level of reoccurring revenue generate. And the key word here is what? Reoccurring, meaning that they're getting these income, they're getting these profits on a recurring subscription-based model, which is one of the best models out there. Which now I'm going to take you guys to my pro tip. Every once in a while, I like to give you guys these pro tips. Pro tip today is company needs to be predictable. For example, you need to have a rough estimate of how much money a company will generate in a given year. If you don't know how much money they're going to generate, it becomes really difficult to value a company because you don't know. There's so many uncertainties out there. As a pro tip, one of the best companies to invest in are predictable cash flowing companies, and that's what Crackle brings. It brings a healthy, a reoccurring subscription-based model, a very predictable model in generating income. Take a look at for 1 month, it's up around 1.3%. For 3 months, up around 9.5% or $6. And if we take a look at it for 1 year, it's up around $13 or 22% just for the year alone. And then if we take a look at 5 years, it's up around $31 or 68 or 70% in the last 5 years. There are so many wonderful companies out there, and this is one of them. That's one of the main reasons why I like Crackle so much. I'm going to take you guys to Seeking Alpha. Let's take a look again. For the 1 year, it's up around 23%. 5 years, it's up 69%, 70%. And if we look at it for 10 years, it's up 259%. Guys, make sure you guys are paying attention because I'm about to drop some more gems. I don't know how well this company is going to do in the next 3 or 6 months, but I know that in 5 years from now, it'll be a lot higher. It's going to kill it even. This is a high quality company. So I don't know what's going to do in the short term, but I know in the long run, it's going to be a lot higher than the $80, $77 it is currently. So that's why I'm going to take you guys to my Robinhood portfolio. And you guys can see I own almost 6% of my portfolio is in this one company called Crackle, and they do pay a dividend, because if we click on their dividends right here, scroll down, they have a dividend yield of 1.22% with a very healthy payout ratio around 32%, but their 5-year growth rate is what? Massive 12% year over year for the last 12 years, and they've been increasing their dividend for the last 17 years. And they have a lot of room to grow because their payout ratio is so small, they could continue to increase it, and they do pay in a quarterly fashion. So that's why, again, out of my holdings, this is one of my top holdings, one of my favorite holdings, just like how Nvidia was there. This is also another solid company that's continuing to grow over the years to come. And you guys can see some of my holdings on the right. So guys, if you guys made it this far, make sure you guys hit the like button, hit the subscribe button. It helps my channel grow. So again, this company Crackle, where did I get it from? If we go to Datarama and we look at one of these famous solid super investor known as Terry Smith. As you guys know, he's a solid investor who is managing around $23 billion. And if we scroll all the way down, he added this new holding of Crackle, GGG. They made a simple buy of 0.17% of their portfolio. They have around $40 million worth of it at an average cost of around $73. Currently it's at $74. Terry Smith is invested into Crackle, and that's why I took an initial look at it. And as I was looking at it more and more, I liked it even better. One of the reasons why I like to look at super investors is because they do a lot of the initial vettings for you. So in that way, when you come in, a little bit more in-depth analysis, and it gives you a better, clearer picture because the initial vetting has been done by these Terry Smith. And then I just add to my analysis, I add to my thesis, and I decide if the company I want to add into my portfolio or not. And that's why there has been some shift in my dividend income. It's relatively increasing slower pace because I'm going into these solid, well-known dividend growth companies. Guys, if you guys made it this far, hit the like button, hit the subscribe button. As always, guys, thank you. We're going to see you next time. Bye, everyone. Some of my holdings right here on the right.